Hello and welcome to another update video about the DXY. Market has come down deep into support, basically to the 78.6 FIB retracement. One of the key support levels we highlighted in the previous video, it turned around basically just above that 78.6 retrace and well, actually not above, it just touched it. And again, you can see how important those Fibonacci levels actually are. So let me just adjust here the background a bit, and you can see spot on turned around at the 78.6 retracement. Now we want to talk about the two possibilities that we now have on this chart. First of all, as long as we are above 101.93, we can actually focus on higher because it completed an A wave, came down in B, and we could now be rallying in a C wave. We don't have a strong confirmation that the low has been made here in a B wave, but we've seen some nice upside, but it's not even in any way stronger than what we did here. Nevertheless, this could count as a 5-wave move to the upside, okay? So it will be the next retracement that will give us truth. Yeah, if it has turned around, we are looking for something like this, basically a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 in the C wave. So it would need to make a higher low in this upcoming strong retracement. And if we talk about a target for the C wave, because we do eventually expect here still a higher B wave, if we talk about a target for the C wave in B, we can measure the length of the A wave, we go to the low of the B wave. And yeah, I mean, first target would be the 1-to-1 ratio at basically $106.97. The extended target would even take us to $110. But the condition for this particular scenario is that we are holding the $101.93 level. Condition is not only because of the FIB support, because we basically maxed out likely Fibonacci levels for a B wave. I mean, it can always overshoot also here to the downside, but ideally a B wave turns around above the 78.6 retrace. But that's one level, yeah. The more important factor here is that if we make another low below $101.93, we're going to get 5 waves down. And if we get 5 waves down, I cannot count this anymore really as a B wave. It would then unlock a more bearish possibility. But so the more, let's say, short-term bullish possibility should now be clear. What would happen if we drop below $101.93? Well, then the bearish option would come into play. Bearish, because eventually we would expect anyway another low here for the DXY. But ideally, first of all, a higher B wave before we come down in C. I do have it somewhere on the chart here. Yeah. So a bit like that, right? So eventually I would expect a stronger move down anyway. But the question is, do we go up first in the C wave of B before we come down, or do we go down directly? The immediate bearish count would would include the possibility that the B wave already topped and that we're now coming down in 5 waves. So we would then be looking here at a wave 1. A wave 2 to the upside, possible wave 3 here, which bottomed at $101.90. This could be a wave 4. Should ideally stay below the wave 1 low, which it has done so far. So it shouldn't go above $103.45 to remain a valid 5-wave move down in an impulsive structure. And then we should get one more leg down. Now I can't really give you a target for the 5th wave yet because we don't have a confirmed top in place for 4. But well, I could give you at least an orientation. So if we take the length of waves 1 through 3, go to the high of the 4th, and then we talk about targets of, well, the first target would be $100.94, and then the extended target would be $100 for the 5th wave. And then we need to see, because then this 5-wave move could only be the first wave of the larger C wave to the downside. So yeah, it remains interesting. The C wave to the upside, C wave of B target or scenario will get much more relevant if we manage to break above $103.45, because then an impulsive structure here will basically get invalidated to the downside. So at the moment, my preference personally would be to see a higher C wave, but both options are of course likely. And it's all about knowing about those key threshold levels, the key levels that I just highlighted to you. And if we, for example, see the $101.93 level break, then we can be not sure, but at least more confident about the bearish count. And if we now break above $103.45, we can be more confident about the high C wave. All right, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.